with all the things that Melvin said, paano ba tayong kikita dyan? Diba? I guess that's the basic question we have in our minds. And I'll try to share with you what I can ask you to look at, no? And in terms of globalizing our portfolio, which is basically the topic of our session today. So, sige, pisahan na natin. How are we going to profit from all of this discussion, di ba? So let's look at what happened in the performances of the investments around the world. Here I'm showing you the slide of performance in year to date as of August 26, 3 years, 5 years. And makita nyo, China equities is the best performing so far. But it didn't do well over the past 5 years. But makita nyo, no, yung MSCI World Index, that's the world global equities. ACWI means all country world index. Buong mundo yan. It did well. As you can see, the 3 years, 5 years, and so far this year. And then the next is the US equity. That's the S&P 500. It did very well before 5 years. So makikita nyo medyo konting bumaba na because it has gone up to all-time highs. And the return so far this year is much less than the world. And even much less than China. Kasi, ang nangyayari na nga is that medyo the price of the US equities has gone so high and the PE ratio has gone so high, people are now taking profits and moving some of their funds in other countries. And that's what we call the broadening out of investments of world investors. So, nakikita natin that there are certain opportunities, not just in the US, but also around the world. But we continue to like the US as well. And it's not something that we should forget as well because the largest stock market in the world and largest economy in the world. Tingnan natin yung ba, REITs is also doing well. Bonds, Melvin's been talking about global bonds as well, did well also so far year to date. India equities, Philippine bonds, I think this is where I will talk about more kasi Philippine bonds are very close to us and you can easily buy this. And also did well so far this year. Ang medyo lang talaga sticky sa atin is the Philippine equity. Talaga namang -4. Pero, alam mo, it has really gone to an unappreciated level. And one thing, in my experience, as a fund manager for over 30 years, it is the unappreciated, undervalued investments are still worth looking at. So, tingnan natin yan. Let's look at the things that we're looking at. So, dito sa COL, as you know, we've launched this fund supermarket. We not only included funds that are locally available, naglagay na rin tayo ng global. We have more than 70 funds in our platform that you can participate in order to reach the world. Dati, you have to be rich in order to invest outside of the country. Dati, you have to be rich in order to buy funds. But now, hindi na because of technology, and because of the accessibility around the world, you can access funds that are all over the world. And now, we can buy as low as 1,000 pesos worth of a global investment. So isn't that very interesting? Now, during my time when I was a lot younger, wala yan. You cannot really buy. Now, you can do that. Fixed income, multi-asset, REITs, income-paying funds, and global equities is now available at the click of your finger. Dito sa COL Fund Source. Okay, let's go straight to the point. What are the investment opportunities that we've been discussing today? I'm simply cutting down. We have a lot of funds. We have a lot of fund picks, but let me just focus on 4. And because of and why those 4? Because of these themes. Number 1. Global double-digit earnings growth are expected for 2026 because of the drop in interest rates, because of the tax cuts, because of the things that's happening in the world, that economies continue to grow, AI, a lot of these themes. certain companies in the world are growing strongly, even for next year, 2026. Why? There is this AI and tech revolution. Earnings of these companies, yung sinasabi nilang Mag 7, yung nag-carry ng S&P 500, they're growing double digits. And it's estimated to grow mid-teens for the next 2 years. Tuloy-tuloy yan. They say that AI is just in an infancy stage. Ngayon pa lang natin naaaral ng mga chat GPT, yung DeepSeek, yung mga Gemini. Ngayon pa lang natin inaaral yan. And companies in this space are investing billions and hundreds of billions of dollars, and we're just in the investment stage. And this is expected to grow and carry the stock markets of the US particularly, and even China. Next, the rally, as I told you, is broadening out of the US. Equities that are non-US, even European countries, and Asia, led by China, Japan, and India, are expected to continue its growth path. And number three, which is the biggest catalyst of growth, is really the central banks are cutting interest rates. They're cutting and reducing rates, making it now cheaper for companies to borrow, making now cost is less, and it is now creating more liquidity in the market. For example, because interest rates are very high today, like 6%, dun ka lang mag-invest, di ba? 10-year bonds at 6%, no-brainer, guaranteed by the government. But the minute that goes down to 5%, which we think it will by next year, liquidity na will flow out of, so hindi ka na pwede, baka mababa na, I can now invest in other investments like the stock market. Then it becomes more interesting, di ba? And how are we going to participate in this world? By investing in these top companies in the world, and we're picking Sunlife World Equity Index Fund. Why? It has done very well. It represents the world, 64% in the US. We have Japan, UK, Canada, China, France, all over the world. This is a representative of all equity markets weighted around the world. And makikita nyo, yung top stocks of this fund. This is an index fund. You call it based on the All Country World Index. It is a fund. You can buy this in pesos, you can buy it through COL, and then you are invested around the world. And the top companies in the world are NVIDIA, gumagawa ng chips, Microsoft, Apple, Amazon, Meta, Facebook, diba? Alphabet, Google. So you are able to invest in the largest companies in the world through this fund. And it has done very well for the past several years. And we think we'll continue to do well for the next years. Next, ito naman AI. Di ba? Lagi natin pinag-usapan ng AI. Now, we're saying that the way to ride the AI growth story now is even cheaper in China. Di ba? You know this Alibaba, you know this DeepSeek, you know this all of these well-established tech and advanced manufacturing industries in China are really, really making wave. And what is interesting about China is that it is cheaper, much, much cheaper than the US. Hang Seng is like Hong Kong is only 12 times PE. China is 18 times PE versus the S&P 500 as of yesterday, as of August 26, is 27.5 times price earnings ratio. The higher it is, the more expensive it is. So the way to get into these companies, to this AI growth story, cheaper, we believe, is to China. And despite, even with the current problems in China, still, alam mo nyo, China is still not yet out of the woods, just to let you know. But we see growth green shoots. We see China continues to provide stimulative measures. And the biggest thing that is exciting is that China's savings is the largest in the world. $22 trillion worth of savings in Chinese banks. Pinakita kanina ni Melvin, there's about $8 trillion in money market savings in the US. That's only 8 trillion. China is 22. 22 trillion. Nung nakita ko to, oh my God. Pag lumipat to, that's the reason why Chinese stock market is doing very well kasi the Chinese interest rate is very low now. The Chinese government is bringing down interest rates very low. It's only at 1.7% ang 10-year bond ng China. 1.7%. So what will this 22 trillion savings do? You can just imagine what's going to happen. But of course, there are a lot of things, there are a lot of factors, but I'm just saying there is just such a large potential. And how do we do this? How do we participate in China? Look at China. We have a fund in the platform, Manulife Dragon Growth Equity Fund. Dragon Growth is China. It's invest in China's recovery and growth potential. Why? So far, it's been doing well, about 14.7% year to date, 23% for 1 year. It is invested across different sectors in China, consumer discretionary, financial, tech, and tinan nyo na to. Tinan nyo kanilang top 10 holdings. Tencent. Tencent Holdings is like the Facebook of China. Alibaba. Alibaba is like the Amazon of China. Xiaomi is like Apple. I mean, ganyan kalaki yan. They're even much, much larger. And their growth story is very strong. So you have all other companies here in China. And you have there, number 10, BYD. Oh, yan ang electric vehicles. Diba? Nakita nyo naman, daming electric vehicles dito. And it's the largest electric vehicle producer in the world. And dati-dati, you cannot really access China. It's very hard for any ordinary Filipino to invest in China. And now, we have made it available for you by a click of a finger, as low as 1,000 pesos. And in pesos, you buy this fund, you are exposed in these companies. Okay? Next. Third is I believe still the undervalued Philippine equities gives us a lot of opportunities. Why? Our economy continues to grow, 5.5%. Dividends are strong. That's an average on the PSEI, 3.3, but all the other high dividends are giving you 5, 6, 7%. Our inflation is very low, 0.9 in July. It's still expected to be very low for the year. Upside of 7,000 from about where we are now, 6.2, 6.3. And the EPS growth is expected to be 9.5% for next year. That gives you an even lower PE of 9.3 from the 10 times PE that Melvin was discussing earlier. So, but Philippines continues to be an undesirable market for the foreigners simply because our liquidity is very low. That is why there is opportunity for Filipinos like yourselves to participate in a market. However, it has to be on a selective basis. It cannot be just the whole big caps or everything. It has to be selective. That is why we are saying that the way to attack this is to go to an actively managed fund that has been outperforming. Patabi lang kasi this is COL's fund. No? I mean, we are saying that we're telling our customers that pag na kayo mag-isip, COL Strategic Growth Fund will help you get into active outperformance with even lower risk. Nakita nyo to, no? Year to date so far is 3.4, 1 year 6.9%. And our volatility, which is the basic risk, is about 9.8, is very low. Simply because we are actively managing it. About now, like 70% in equities, 30% in fixed income. So we are going in and out of the market depending on value, depending on technicals, depending on fundamentals, depending on a lot of things. And as you can see, our performance has been doing well and outperforming the Philippine Stock Exchange Index with low volatility. So, di ba? That is why we continue to like this fund. That's why we believe that if you want to build a portfolio in local stocks, look at Seoul Strategic Growth Fund. And last but not the least, how do we benefit from BSP cutting rates? Kahapon, nagbaba na naman ng interest rates ang central bank, ang BSP natin, by another 25 basis points. And as Melvin said, that when rates go down, the bond prices go up. And during rate cuts, let me just give you an idea. During the period when there is a rate cutting cycle during the global financial crisis in 08-09, bond performance did about 13.7% during that period. Eurozone crisis, January to July 2012, 6.6. Post-inflation spike in May to November 2019, 11.2%. During the COVID, interest rates also went down. Feb to November 2020, 12.9%. So, because the reason why we're getting this kind of a yield, a return for these funds, it's because when interest rates go down, the bond price goes up. The price goes up, plus the interest income it earns. Kaya ganyan ang kinikita niyo. Now, the portfolio also gives us the return of about 4.8 right now if you just buy a bond. Net, kasi 6% more or less, about 4.8. And then, it even provides diversification for your risky portfolio. Kung may equities ka, maglagay ka ng bonds to manage your risk. Because the volatility of the bonds is only 2.4%. Really very low. And what fund can we look at? Our fund pick is the BPI Asian Bond Fund, Philippine Bond Fund. So it captures the fixed income opportunity we have in this country. It did so far about 2.6 year to date and about 6.39% for 1 year. In about 3 years, about 17.2%, because it is invested across government securities, fixed rate treasury notes for different tenors. Nakikita nyo on the right, the maturity profile. It's really invested across the different maturities. So, just to summarize, what are investment opportunities? Are fund picks and the returns and the thesis that I have for you. Number one, investing in the world, the Sunlife Prosperity World Equity Index Fund. It is your chance to invest in the top companies in the world through pesos. And Manulife Dragon Growth for China, actively managed, that participates in the China and Hong Kong growth. Number three, for local equities, is the Seoul Strategic Growth Equity Fund. It is actively managed, leveraging and flexibility, value momentum, risk framework for long-term returns. And last but not the least, the BPI ABF Bond Index Fund. So we can participate investing in sovereign, quasi-sovereign bonds that will benefit from the rate cuts. So I simplified it by just talking about 4 top picks that we have in the platform. We have other funds in the platform. We also have other top fund picks depending on your objectives. If you have income paying, we have the income paying fund, you have thematic funds, you have different types of funds. But so far for these discussions, para mas simple lang, I just narrowed it to 4, so for easy remember.